You ever wish you had a crystal ball for the markets? You know, some way to know a major turn was coming before everyone else starts rushing for the doors? Well, today we're going to dive into an early warning system that's designed to do pretty much just that.
So let's start with a frustration that I know every single trader out there has felt. It's that sinking feeling that you're just always one step behind the market.
I mean, does this sound familiar? You see a huge rally, right? But by the time all your tools and charts finally confirm it's safe to buy in, the best part of the move is, well, it's already gone. Or the market takes a nosedive, and you only get that signal to sell after you've already taken a pretty big hit. It's the classic trader's dilemma.
So why does this keep happening? Well, it's because most of the common tools we use, things like moving averages, even RSI, are what we call lagging indicators. Think of them as the market's rearview mirror. They're fantastic for showing you where you've been, but they're pretty much useless for seeing the road up ahead. To actually anticipate what's coming, you don't just react, you need leading indicators.
So what if there was a tool that acted less like a history book and, more like a smoke detector for the market?
And that is the whole idea behind MXC Leading Events. See, it doesn't really watch price itself. Instead, it's monitoring 7 kind of hidden clues about the market's internal health. Clues that tend to shift before the price makes its big move. It's built to spot the smoke, those subtle, early signs of change, long before the fire of a huge rally or a crash becomes obvious to everybody else.
Okay, so this is what it actually looks like in action. And I know, it can look a bit intimidating at first glance, all the letters, the colors, what does it all mean? But don't worry, we're going to break down exactly what you need to focus on to make it incredibly simple and really powerful.
So let's pop the hood and see what's really driving this thing. What are these 7 secret clues that it's tracking under the surface?
Okay, the first group of clues are basically sentiment gauges. They measure fear and euphoria. One looks at the volatility-of-volatility, which is a fancy way of saying how anxious is the market really. It's not just about how much prices are moving now, but how much traders think they're going to move in the future. The other one looks for what are called 90% days. These are these rare days of just extreme panic or total euphoria, where almost every stock moves in the same direction, and that often signals that a trend is just completely exhausted. Next up are the clues that measure the market's overall health, and this is really the engine of the whole system. These are things like the Zweig breadth thrust and the McClellan oscillator. They're asking these really critical questions, like, is this rally for real, with thousands of stocks participating, or is it just being propped up by a few giant companies? That's what the RSP/SPY ratio checks. Is there momentum building under the surface, even if the price chart doesn't show it yet? These signals get at the true strength behind a move.
And to really see the power here, just look at the Zweig breadth thrust. Breadth is just a simple way of saying how many stocks are going up versus how many are going down. Well, this signal looks for a massive sudden shift from tons of stocks going down to tons of stocks going up. It is incredibly rare. It might only fire a few times in a decade, but when it does, history shows it has an incredible track record with over 80% accuracy for signaling the start of a major new bull market.
And then there's the most unique clue of all, the Lyapunov kill switch. This thing is a pure chaos detector. It actually uses principles from chaos theory to measure instability in the system. Just think of it as your ultimate safety override. When this signal flashes, it's a non-negotiable warning that the market is becoming dangerously unpredictable, and it is time to seriously reduce your risk.
Okay, so we know what the system is looking for. Now, let's see how all this actually comes together on the chart so you can use it to make some decisions.
So we're back at the chart, but this time, let's make it easy. You can pretty much ignore everything else and just focus on 3 things. The letters and the diamonds that pop up on that 0 line, those are the signals firing, and then the green and red shaded areas below, which show you the strength of those signals.
And this brings us to what is, without a doubt, the single most important concept for using this tool effectively, confluence.
When just one of those 7 clues fires off, I want you to think of it like a whisper. It's the market kind of tapping you on the shoulder saying, hey, pay attention, something might be brewing over here. It's interesting for sure, but it's not a call to action.
But when you get 2, 3, or even more of these signals firing around the same time, that's confluence. And that whisper, it becomes a shout. Because these clues are all measuring fundamentally different things. When they all start to agree, the probability of a real market turn goes up, and it goes up dramatically.
So your whole process really boils down to a simple 3-step scan. Step 1, spot a new signal. A letter or a diamond appears. Step 2, look for clusters.
Is it all by itself, or are there other signals active too? And step 3, check the signal strength. How tall are those green or red shaded areas? That's basically your conviction meter.
Okay, let's tie this all together now. How does this actually give you a real strategic edge in your trading?
First thing, and this is absolutely crucial, this is not a tool for high-frequency day trading or scalping 5-minute charts. No. It is designed for strategic positioning, for making those bigger picture decisions about when to get in, when to get out, or maybe when to get defensive over a period of days, weeks, or even longer.
So, the bottom line is this. What does it give you? It gives you a framework to potentially spot major bottoms while fear is still sky high but the smart money is quietly buying. It helps you see the warning signs of a top as the market's internal health starts to weaken. And maybe most importantly, it gives you that objective, hey, reduce your risk alert when the market itself just becomes unstable.
Ultimately, it all just comes down to this one question. What could you do differently? How would your trading change if you had a system that was specifically designed to see the turn before the rest of the crowd even confirms it? That right there, that's the edge this kind of analysis is trying to provide.